Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, July 28th at about 2:15 p.m. Eastern. Well, the market is bouncing back today from yesterday's big reversal in the afternoon, and so far today, investors are buying on that weakness. Many investors are concentrated on the mega cap stocks, with Dow component Intel issuing earnings after the bell yesterday that topped second quarter expectations and provided better than expected third quarter outlook. So on that cheerful note, let's go on and look at three charts that could give us some insight into the week to come. Okay, we're going to change things up a little bit today. Today we're going to look at a monthly chart of the S&P 500 spider, the SPY. Now, when I captured this chart today, the SPY was trading at $456.80, or about $45.68 on the S&P 500 itself. Now, I believe, and I always have, that it's always a good idea to look at long-term charts, and because to get the big picture of stocks and the market, that can really add value to your analysis. And it gives you a much clearer picture of the market's health than if you just stare at even daily charts, which is fine. But if you look at a monthly chart, you see whole different things. So today we're going to start with this monthly chart of the S&P 500 spider, the SPY. And again, as you all know, it's the ETF that closely follows our benchmark S&P 500 index. Now, if you look left with me on this chart, you'll see that it goes all the way back to 2011 and to lows back then. And it moved up in a wonderful uptrend, actually a very calm uptrend compared to what we've been used to the last few years. Now, right here in 2020, you can see the COVID dip right here. And it dipped, the SPY dipped down here in March to a low of $218. That was in March. Then we had a very impressive rally in April and subsequent uptrend all the way up. And look how the SPY jumped all the way up in a very, very steep uptrend, if you look at this chart, to its all-time highs at $479.98, and that was in January, right up here in January of 2022. Pretty darn impressive considering what was going on. Now, do a favor with me here, just for some overall knowledge. Look back at these uptrends, how calm and quiet and orderly they were in 2012, 2013, 2014, even up into the last quarter of 2015 and the first quarter of 2016. We had some lows here, but look how calm and quiet and even and orderly these uptrends are. Then look at, in 2018, we had the move down, of course, the giant one in 2020. Notice how when stocks move in a nice uptrend, how orderly they can all be. And then when the bears come in, look how volatile price action can get when price moves down. So we always say price moves up more slowly than it moves down. And volatility doesn't always mean negative, but it does mean that that the candles you're looking at are rising or falling in larger moves, and maybe a little open here and then a little close a little later on in the month. Some of these have very big price ranges, so you can see where the bulls are strong, but then when the bears come in, whack, and things can fall really fast. So I just thought that's kind of interesting. And I watched the volatility in these candles in comparison to what came before, because it gives me some insight into what might come next. So I just think that's kind of interesting. Now, we know again that the SPY came up to $479.98 in January of 2022. We know that from there, generally, it slid south and it slid south sideways, slid south. Then in June, July and August fell to a low down here of about 348. And keep in mind, this would be the 20-month moving average, the red line, the 50-month moving average, the green line, and the 200-month moving average, the black line. So we fell to a low here at the end of 2022 in November of about 348, then rallied back up to close the year at about 410. So that was good. Right in here, we closed the year of 2022. Then, of course, we came out of January and the opening of 2023 in a pretty positive manner, and then rallied to our current high today, again at 456.80. So what does this chart tell us today that we can use? Well, I know that I've been saying to you for the last few weeks on a long-term chart, we have resistance at 456, 457, 458. Well, that is the resistance from right here. And these three candles back here in February, March, and April in 2022, all three of them stayed right at this level around 457 to 462. They couldn't get above those highs. So that's 3 months of price resistance right there that may or may not be coming into play here as we are going up in a nice uptrend. So we're bumping up against those highs, 457 to 462, and can the SPY now punch through that ceiling? Sure it can. It can. So far, big tech earnings are coming in mostly positive, and the Fed raised interest rates 0.25 basis points. We expected that. That was kind of assumed, and it happened. So then your next question is, can the SPY move all the way back up to its all-time highs? To make it easy, we're going to call it 480. And absolutely sure it can do that. Are we going to see a pullback at some point? Sure we are. You've got to pick your reason, but profit taking always comes in. Now it can all happen, but profit taking always comes in. Why is that? Because markets of industrialized nations move in cycles. There's little cycles inside smaller cycles inside smaller cycles. What do we have here if it does start down when it gets to 480 or even before? Well, we have potential support right here at right down here at 415, 416. You've got the 20-month moving average coming in, and you've got price support here, potential price support here at about 415, 416. And then if we go higher than this, then up at that 459, 462 area. So kind of interesting what we have going on here. Going forward in the next week, we have many more earnings announcements to come in the next mainly 2 weeks, maybe a little longer than that. So knowing what you see here, hopefully it helps you. Stay tuned and trade wisely. Our next chart today, we'll go back to our daily charts. This is the Invesco QQQ, symbol QQQ. It represents the top 100 non-financial companies by market capitalization in the Nasdaq 100, including companies like Alphabet, Amazon, Nvidia, Microsoft, AMD, and Tesla. All of those seem to be making the news recently. Now, when I captured this chart today, the Qs were trading at $383.43. We have an all-time high, you can't see it on this chart, in November of 2021 at $408.71. And we're getting close to those highs at 383, with the Qs about 30% higher than they were back here at the opening in January. At the January lows, I'm going to say at 260. So the Qs have gone all the way from 260 down here in January, all the way up to February highs up here over 310, then moved back to the lows here at 285, shot up and even went above those February highs, went even higher, shot up to a high of 372 right here, 372.85 on June the 16th. Notice how all along here in this uptrend in most of it at any rate. The QQQ used the 20-day moving average, the red line, for support and almost at times for a trend line. So we're back up here at the highs in June at 372.85. Then it backed off to the 20-day, but used it for support, didn't go back through it. So we know it's strong because the 20-day is rising, 50-day is rising. This is all good. So then we flew up to the intraday high, or right here, June the 19th at $387.98. Then it dipped back down to the 20-day moving average, and again kind of been moving sideways up a little bit, and again today we're at 383.43. So the 20-day moving average at the moment anyway is still being used for support. The near-term price support today it's price support and moving average support, so that's pretty strong, could be strong. That's at $375.41. Then we come down here to more price support at 364. We've got 357 down here, and above that right now, just above it, we have the 50-day moving average, which can act as potential support at $362.19. So again, more mega cap earnings are coming out next week, so stay tuned and trade carefully. Our final chart today is a daily chart of the iShares U.S. Telecommunications ETF, the IYZ. It has 20 holdings. The top holdings include Cisco, Comcast, Verizon, T-Mobile, AT&T, and Charter Communications. Now, when I captured this chart today, the IYZ, where's my pointer? The IYZ was trading at $22.26. Now, we can see, well, you can't see the December lows here, but the IYZ climbed from December lows at $21.59 to up here, all the way up, bounced all the way up here to February highs, and almost everybody had February highs of this past year at $25.23. Then if you'll back up and look at this pattern, you can see that from January, the IYZ formed a head and shoulders pattern, actually a pretty clear one. It formed a head and shoulders pattern, and the 50-day moving average, we could say, pretty much acted as the neckline for this, at least right around it. So then this top trend reversal pattern, the the head and shoulders pattern, did form. It did break below that gap below, and it did come down and fulfill the pattern. Came all the way down to a May low. If we keep on going, we can see the May low down here at $20.91. Then it rallied back up through the 20-day, the 50-day, to June highs at 22.40. Retested that these lows back down again here around 21. Retested those lows, then came back up to a July high of 22.52, reached down to a July low of $21.15. So we had this low here, just slightly higher here and slightly higher here, and that's what we want to see. This appears to be forming a base right here, and it's back up again to where we are now at $22.26. Now, you're going to say, Toni, Verizon and AT&T have problems. Yes, they do, and I get that. But I think with a little time, the IYZ may break out, and if the IYZ can break out of this base here, I'm going to think about it as possibly holding it as a longer-term trade. So in the coming weeks, if the IYZ can stay above the 50-day moving average, which is now coming in here at $21.75, and if the market stays relatively positive, I may add a small position of the IYZ to my trading portfolio with a stop, a real close stop in here at $21.25. Now, if and when, look back here with me at a prior high back here, if I can draw a straight line. I don't think I can. If and when the IYZ rises above and closes above $23.35. That's going to be right back here. It's these highs back here. So if it can do that, I will add to my position, and of course by then I will have a trailing stop. So you may want to keep an eye on the IYZ in the coming weeks. Now, if you'd like to become a more successful trader, this is the perfect time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. And if you'd like to learn how to swing trade, position trade, trend trade, bottom fish, and more, check out these programs. I always say how to read charts is great for beginners. 3 winning setups is great for short-term trades. And what we're doing with the IYZ here, if it behaves properly, is we're bottom fishing like a pro. But of course, we'll have to see if it does what we want it to do. These programs will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link up here in this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.